Hey guys, welcome to Market Insights. Today is November 11th, and I hope you've all taken a bit of time to just pause and reflect. It is Remembrance Day here in Canada, so with that, we will get going. We're going to call this issue Now What? In this issue, we're going to talk about some speculation and equals big profits, Kansas and Minneapolis, those wheat contracts, the big spread between them, and creating a stop-loss trade in your marketing strategy. So stay tuned. It shouldn't take too long to go through this one. And if you want, just download it right on the PDF right from the website there. That's a good way to read this thing on your own time. So without doubt, let's get going. So 2021 crop still needs to be marketed in a way that's going to maximize profits. We know wasn't the greatest yields out there, but there's still some great prices, right? In my opinion, over the next 6 months, this is going to be one of the hardest marketing seasons farmers have ever seen, ever. That's just everything that's come down the pipes. It makes it very unpredictable. And I think that's a bit of an understatement right now. It's not like normal years where you can take an educated look and say, I think this is going to happen. There's so many black swans that can come out of nowhere and just take you out, right? So every farmer needs to sell their grain at some point. The question is, and this is the multi-million-dollar question, is when and at what price? And that's going to be different for every single person depending on who you are and your own personal situation. So as far as I'm concerned, all grain that is unpriced grain is now considered speculation grain, right? So this means two things. One is you are okay with selling it at 2019 prices because you've set it up for speculation grain. The trade-off for that is that we are in a bull market and that should continue. So the role of speculation is important because it allows for the potential for huge profits. Now, this is very important to remember that, right? But why does this matter? On either side of the market, there's huge financial implications. If it goes up, it could easily go up another couple bucks a bushel, if not more. But on the same side, it could drop just as much. It could go right back to where it was last year at this time. These are the kind of markets we're in. So risk management all of a sudden becomes supreme. And we got to really pay attention to risk management and the role it plays on your farm. So managing speculation for the big win is so much more than just a hope and a prayer. I mean, hopium is not a strategy. A lot of farmers are sitting there, oh, it's going to go way higher, it's going to go way higher. But why? And at what price? How high is high enough? And at what point does this thing stop? So step one in these kind of markets is, can you sell enough grain to cover your cost of production? And you'll understand why in a minute here, but why we say that. This is a little different than other years because of the volatility in the marketplace, right? So the step two, after you've sold everything to take care of your cost of production, obviously we know there's some crop production issues this year, so it might be a moot point to some farmers. So step two is speculation for the big win. This allows for the potential of a huge profits with the limited downside risk because the cost of production has been taken care of. Now, when you think about that for 2 seconds, what we're really saying here is you're covering all your costs with what you've sold at these prices. The price is basically double from what it is, and I mean the yield is quite a bit down, but you can still cover your costs and still have a relatively equal amount of grain left over to sell later if you're in a decent area this year, right? So what that kind of does, it kind of creates a stop-loss trade, and then that removes the worry of the market dropping down to, say, $15 on canola, which it easily could do, which would put you at a financial loss on the farm, right? So that's why we would look at it this way. So if the market tanks, which it very well could, we saw that in lumber, and we'll probably see it with some other things here too this year, your costs are taken care of, and you can farm again next year. It takes one less thing off your plate to stress out about, right? And I think in these kind of markets, this is how you trade effectively. You're treating it more like a futures account if you're into the speculation mode. And this is how you market your grain like a professional, not an amateur. An amateur would just purely speculate. And just hope for the best with no caution, throw caution to the wind, right? It's not a good strategy in these markets. So what are the parts of speculation this year? We got to know about this. This is the technical analysis. That's the chart. People always talk about that. Some guys base their whole trading philosophy on that, which sometimes works. And so that would give us the indications on how high this thing is going. We would look at the path and say this is your support and your resistance lines. We've all heard that. So that's technical analysis. Fundamental analysis would be, all the data that's coming in. That's the USDA, the Stats Can. That's why this market would move, the direction. So right now we know that fundamentally this thing should be going up. This is a bull market. Now there's a lot of other things going on right now, but the data is pointing that trajectory, right? And of course, in this marketing world, it's a real arts and science kind of thing, right? Your gut plays a big deal in this thing, right? If you're not comfortable holding on the grain, you got to sell it. Or you think it's going higher, you got to trust your gut sometimes in these kind of markets, right? So found this picture meme thing. Life is not always a matter of holding good cards, but sometimes playing the poor hand well. And I think that's a really good thing for this year. A lot of guys did not have that great crop. And how do you maximize that without losing a pile of money if this thing collapses? Take advantage of what we got going on right now. So let's get right into the bulls and the bears here. We talked last issue. We are still in an inflationary bull market. And like we said in the last issue, these are really hard to trade because they're rare for one and they're unpredictable. We don't really understand how they're working. We do know that the U.S. and actually every single country has printed a pile of money and pumped that into the system. How does that affect everything? And then on the bull side, we do have a serious supply issue. How does that work? If we were in a strictly inflationary market, it's a simple buy and hold. But now we have a double whammy. We have a bull market. So this market is different. There's a lot going on right now. It's an extremely complex market. And you got to be really cognizant of that, right? So don't get caught in the thoughts that we can just continue to go on forever at these prices, right? So the bulls and the bears, again, everything that's growing in Canada right now, from my vantage point, it does have upside potential. Depending on how much, we'll have to feel that out as we go, right? We do know this. Canada is going to run out of grain much earlier than other years. Normally, we can kind of complain that we're running out of canola by July or late June or going to the bin bottoms there, right? This year, it's going to be a lot earlier, right? There's no getting around that one. This could be our Achilles heel because of this. If there's no crop out there, we're going to see demand rationing because prices are going to go way up. And if they can't get the product from Canada, the buyers are just simply going to leave and look for it elsewhere. That's not a good scenario in the long term. That's really, really bad. We could have record high prices with no buyers. We see that every once in a while where the price is really, really high and the elevator, you phone them up and you say, hey, can I book that price? And they say, no, sorry, we're off the other futures. We don't have any homes at that price, right? So one of the best advice we can give you is the warning signs. We want to watch for cancellations that are going on out there. We know certain countries always cancel things and then all of a sudden buy it back later. We could have, like I said, these super high prices with no delivery, the so-called we are full. And one thing we got to really watch, guys, is this elephant in the room, and that is the soybeans and corn crop down in the States. They are huge. In fact, since January of last year, January 1st, 2021, soybeans are actually down in price by 11%. Corn is up 15%, so that's good. And spring wheat, the spring wheat is a big bull market. It is up 68%. It still hasn't hit its tops from 2011, so we're just going to take a quick look at this here. We're going to look at this spread between the Minneapolis and the Kansas wheat. And one thing that's really, really important here, let's just go here, is the 5-year spread between the Minneapolis and Kansas wheat. So this chart here this up and down black line here, is the spread. So that's Minneapolis minus Kansas, right? So normally it looks like it's bouncing around, you know, we can always say dollar bit averaging. I think if you go long term, it's right around there. And, oops, so we got this bigger now. So last year, you know, when we started this year, it was at 20 under, right? So that's pretty impressive. And it's gone all the way up. For Minneapolis wheat was 20 cents below Kansas wheat. So the Kansas wheat would be like our CPS wheat. The Minneapolis wheat is like our hard red. So that's why I like to use that. Now Minneapolis wheat is way up here at this $2.65. So Minneapolis wheat has appreciated by almost $2.80, almost $3 above Kansas wheat. That's a very significant gain. So there's a big issue going on with the hard red wheat market. There's no getting around it. So we can watch that hard red wheat market continue on its trajectory maybe and see how that goes, right? So that will be exciting. So we want to talk about speculation gone wrong. What happens when speculation goes wrong? And there's a really good picture here. This is what happens when speculation goes wrong. So that's kind of it for the market insights. Here's our disclaimer again. Just these are my opinions, and you can do what you want with them. And if you're looking to upgrade your grain marketing, with our feature product this week is the Grain Navigator. It is a much more detailed look at the markets in it's kind of the same format as this Market Insights, and it's a paid publication, and it goes a deep dive into everything, right? So you're going to want to check this out. You can just go to insightag.com, follow the links, and sign up there, or you can just scan it with your phone, that QR code. That's easy to do. And for sure, once you're done watching this video, go over to the website and download the PDF. You can read this whole Market Insights online there, and that would be great. So you guys have yourself a great day, and we'll talk again in a couple weeks.